The question, George, is to you. And this is from our personal experience at Alliance. We settle claims in excess of $180 million a year, every year. And the entire capital today is being driven towards product, technology, and distribution. I want to understand, is technology going to play an equally important role, according to you, from a claim settlement point of view? Or is going to be at a center stage of distribution, product simplification, ease of buying, and claims will continue to remain a sticky issue? What's your view on it, and what have you been able to achieve it globally?
Yeah, I think it's a very important question, and I think this is a question that the regulator in Singapore, when we had a last event there, raised exactly that question. He said it was his experience was he's bought an insurance, fantastic experience buying insurance. Then he went to claim insurance. 1 year later, he is still waiting for his claim. He said, you guys need to really worry about the claims. Please focus on that. So I think that's the same message from the priority standpoint. Of course, everybody initially focuses on the distribution, how easy it is to activate insurance, how easy it is to adjust insurance, all those kind of things that are first degree priorities. But I think the claims, if you think about it, are the real product of insurance. When somebody buys insurance, they're not buying a piece of paper that makes them easier to sleep at night, but they're buying something that is a promise of a claim in the future. So if we don't apply technology to claims, I think it would be a very big shortcoming, because the process will remain broken at the back. And then very quickly, especially on the things like employee benefits, health insurance, people will realize that what they're buying is a crappy product. And once they realize that, very quickly the growth and the purchases from SMEs will stop or will slow down, because they're just not going to be interested to buy this product. It's going to be considered to be a broken product. So from a claim perspective, what we've seen work the best is that, again, create a very easy experience for the customer from a technology perspective to at least initiate the claims. We all know about things like the straight-through processing of claims, simple claims, low value, applying artificial intelligence to basically say we've approved 99% of these claims before. Why do we need to ask 25 questions for the customer to be able to, for the employee, for example, to be able to claim this? It should be paid out automatically. It should be settled, and ideally, actually, it should be prepaid so that the employee doesn't need to take any money out. So I think it's still relatively early days, because it feels like the SME space have not really taken off to a point where there's a critical mass for us to be able to have enough data to solve for this. But I would say that the foundations are there. Definitely the technology needs to play a big role in the claims component as well.
Thank you, George. I personally believe insurance companies not only need to plot their results of revenue and premium, but also turnaround time on claims. But anyways, I'm not sharing my thoughts right now.
Is truly a cashless society even possible, right? I think there'll be use cases that people might need it, but even for you, is it even truly possible? And what maybe are the top one or top two reasons that it has not happened so far? What has stopped us, according to you? So maybe we'll go round robin on each of the panelists, and then we'll break it up into individuals.
So 100% cashless society is possible. A bit of background: before I started Bixi, I worked at Alipay in China. And I don't know if anybody here has spent time in China. I mean, it's basically almost cashless. But there's still pain points, right? Because I was a foreigner living there. So even though I'm working at Alipay, I still can't use Alipay because I don't have a bank account because I was a foreigner, right? So that is still a pain point that has to be recognized. But as far as cashless goes, I mean, the noodle vendor in a remote village far outside of the urban landscapes in rural China, she uses Alipay, and not only uses Alipay, uses the investment apps on Alipay. So there is, cashlessness is possible, but whether it's something that we want to have ubiquitously, Again, I'm going to share an anecdote, and this is not the nefarious side. This is the very personal side. 2 weeks ago was my husband's birthday, right? We share bank accounts. I live in Thailand. We're basically cashless. But I'm trying to buy him a gift, and he's getting pings every time I go from store to buy him things, so he knows what I'm buying. In this regard, you do want some semblance of privacy, and so I actually had to go and find cash so I could continue, in a vain attempt at surprising him for his 40th birthday, right? So I don't necessarily, having seen the extreme of how far we can go into cashlessness in China, which is, kind of leading that pathway, there's a lot of pros, obviously. Watching a woman who sells $1 noodles in a rural area on an investment app was actually my aha moment for Bixi. I knew that because of a smartphone and an internet connection, this was a possibility for women all over the world. But that being said, if I want to surprise my spouse, or moreover, if I just want to have a semblance of privacy, where a company doesn't know every single thing I buy, including, the time I buy my toilet paper or the time I buy my feminine hygiene products, I still want to have that as an option.
That's big data for you. So how can women play a role in trying to do that? And maybe I'll come to you, Sachin, after that to maybe add.
I don't think women can play a role. I think we play the role in financial inclusion. To take it from rhetoric to reality, we are the gap. So not to, just throw out numbers, but I'm going to throw out some numbers. We make 80% of all purchasing decisions globally. We circulate over $70 trillion in the global market. How much of that do we own? We own 30% of what men own in the global market. This is why this idea of investing, it's so urgent, not only at the personal level, because here's this another scary number. We are 80% more likely to retire in poverty than men, regardless of how much we earn in the course of our career, regardless of our education. So, the examples that Paroma brought up, we're at both ends of those examples. And this is something that was really surprising when I started Bixi. When I originally started Bixi, my background was I left the United Nations after 10 years to work in FinTech, exclusively with the objective of bringing financial inclusion, right? And so I immediately thought, okay, I'm going to focus on last mile communities, technology, etc. Except before I launched Bixi, we did 6 months of focus group studies, and what we actually found was really terrifying. Women, like all of the women in this room, like myself, after a long, successful career at the United Nations, at white shoe law firms, I'm 33 years old and I'm looking around, I'm like, do I own anything? Like, what is my investment portfolio? It's pretty bad. And when you go to urban centers all over the world, particularly millennials who are 25 to 41 years old right now, same story. MBAs, women who work in finance, investment bankers. I have pitched Bixi all over the world, and I cannot tell you how many times somebody has sent me a direct message afterwards, who literally is at an investment bank in Singapore, and she's like, okay, I don't. Where do I download the app? How do I get involved in this? This is much to our detriment, and what this means is if we can bridge that gap, not just Bixi, but the work of every single person in this room, it's about targeting women. Then we can be serious about financial inclusion. So what does that actually look like? Based on our research and the prevailing research, why women aren't investing, why a lot of the reason why we're not taking advantage of financial services is in part because of accessibility, but it's in large part of that accessibility is not just the hardware. That accessibility is about being on a journey that we understand. So a couple of things, I know as I mentioned earlier, I'm 40, so I've had a long career and a long life. And before I did my law degree, I studied economics, specifically behavioral economics. So I look specifically at when you kind of see socially people are doing or not doing something and it doesn't really make sense, you dig deeper. You don't just assume, oh, it's because they don't feel like maximizing their benefits. You kind of examine, well, why are 99% of women not investing? Why are brilliant, 33-year-old women in finance in London, why don't they have a portfolio? And what we actually found, it comes down to there's a number of behavioral distinctions that make it such that women don't want to invest. So one key finding that was only published in 2021, we don't invest because we lack confidence, and we lack confidence because we lack literacy. So we have a misperception that we know less than we actually do. So in order to trigger women towards investment, we have to give them knowledge, and then we have to build that confidence. The second really key finding, and I'm going to go back to, as you mentioned, this is anthropological, we're back around the cave. The men went out hunting. We were inside trying to figure out how to parse out scarce resources. So how we have been socialized to make decisions, financial decisions or decisions on scarce resources, is to talk to our peers and not financial advisors. This is real, and this is not me, this is Harvard Business Review, there's a number of studies about this. And then the third, so I think that's a really big distinction. We talk to our friends to de-risk financial decisions. And the third kind of behavioral thing is at the emotive level. When men think about money, they experience shame. Whereas women, we experience anxiety. So is it a surprise that the entire financial industry is based on confidentiality, which fixes shame? Where are our dimmed lights, our scented candles when we walk into, a large investment bank? And I'm not being trite. In the medical industry, they've actually recognized this, and now they're offering birthing techniques with dimmed lighting, mood music, because they're trying to curtail women from having births at home, which is increasing, maternity death rates and infant death rates. So these are these small UX changes that we can make to bring women into the financial fold. So to summarize, we are the answer to financial inclusion. We're 51% of the world. We own less than a third of the resources. So if you unlock us and bring us into the fold, you will unlock this problem of financial exclusion.
Hey, thanks so much.
To help us understand some of the global perspective, how are different economies dealing with data issues, and where do you see India fitting into that conversation? Thank you.
Thank you. I run digital for world's largest digital life insurer. It's a $3 billion life insurance company, digital life insurance company based out of Singapore. And I interact with a lot of global players and global counterparts from that perspective. And the global lens for privacy, as you mentioned earlier, is very different in different parts of the world. There is a European lens where the consumer is supreme. They will create laws which they would not know how to fully execute and implement, because every organization in some shape or form would be violating GDPR in some way. Because the extreme end of GDPR is you can call your bank and say, I want you to delete all data you have about me. And that's the one extreme you can go. I had a friend who actually ordered Barclays, says, send me all my transaction history and all my activity history. He received 400-page document. So that's the European level. The American level is another aspect there. You have some privacy, but there is a price at which you can breach and you can get away with it. Whether it's Equifax, Experian, a lot of these big players had all those breaches, and there is a structured process that this is the fine and you're fine with the fine. That's a lot more American structure. The Chinese structure historically was that the private enterprises would be able to build their own walled gardens. And over the last 2 years, the government has imposed a lot of strong governance around it. So the Chinese model is let the innovation thrive. Once it reaches a certain level, then we will come with the right structures and frameworks. Because if you come too early, what will happen is the cost of compliance will kill all your young small players, and the larger players of yours and the larger global players will be the one left. You will destroy your first gen, second gen companies. So from that perspective, which is why if you see, other than the Americans, Europeans, the largest global companies from data, whether it's Tencent, Alibaba, from China, and now TikTok, the whole ByteDance group is from China. That does not happen. So when we look at Indian context, we have a lot of different, there is no unified Indian view to privacy. RBI has one view. IRDAI has another view. The Technology Ministry has another view. The Telecom Ministry has another view. So the biggest challenge with the Indian view is that there is no unified Indian view. And which is why when you are building a solution which will most likely cross boundaries of different ministries, then where would you land? RBI says you need data localization, but the telecom ministry has not said it. So telecom servers, a part of telecom servers can be overseas. So the biggest challenge, if I look at other markets, most of the other markets have, I would say, at least at their country level, they have harmonization on what does it mean and what do we want as a country for that specific jurisdiction. The lack of harmonization between the different subsectors is the one which is the biggest pain point for somebody who is building for India or building in India.
So Varun, to you, a lot of these problems that we talk about, eventually we say solution lies in technology, right? For everything. Do you think privacy, which is such a core issue, can new technologies that we talk about, blockchain or web or whatever these words, does any solution lie there?
Human greed is a very powerful objective. No technology can withstand the resilience and perseverance of human greed. So you mentioned about some companies trying to say, okay, we will not take access to this. Recently, I saw an Indian FinTech. What they were doing was, they were actually, instead of trying to worry about contact and everything, the Gmail inbox, because India is majority Android market and most likely will remain the majority Android market. They started to go and crawl the Gmail inbox and build the whole credit model on the Gmail inbox. And there is no governance policy around that. There is no regulatory policy around that. Can you crawl the email inbox of the person? And as you can say, email inbox has way more data than all the points you mentioned. And they build the whole model on that. And they say it's not illegal. So that there is a huge line, is it legal, is it illegal? And it is not defined. And which is why what is more relevant is a regulatory position which goes on an intent basis, risk-based, intent-based regulation. Where they say, did the customer have an intent to share this? And then you create tiers on that. Till the time you have tiered, like the current structure, here's this heavy thing, will put this on everybody. Because every time you do this, some smart genius will figure out today's Gmail inbox. Tomorrow they will figure out something else which is on that device, which will be outside. So which is why the focus goes to the point of, can you make it intent-based? And then also to ensure that the smaller players are not disadvantaged. I'll give you an example. When Singapore had the similar problem, they created a simple model that there is a national login system. So you can just put a login by SingPass, which the previous panelist was saying. You're a small fintech, 10 people, no problem. You can do that. You pay 40 cents per login in authentication and you will get that. And the customer has a right to go and revoke the consent and pull that data out. Overnight, they removed all of these smaller players because as a customer also, I was like, I don't want to fill the form. I don't want to fill the form. I want to have that. And I go to that platform and I can see which companies have taken my access and I can do cross, remove. So there the government said, if we try self-regulation, it's never going to move because the greed will overpower somebody. So we will have somewhere in the middle. We'll create a public funded infrastructure which is better than 80-90% of the scenarios, which will solve 80-90% of the problem. So you need some level of public infrastructure where India has UPI, India has DigiLocker. So something on the lines of an Indian authentication system, that's something which will take, so that's not a new revolutionary technology, it's a scaled implementation. The way Aadhaar solved payments, a national ID will solve a lot of national login system or 2.0 based is something which will take down a lot of these pains.
Yeah, I think you